Trade war fears send Asian markets tumbling. Major Asian stock indexes plunged Monday as escalating trade tensions between the United States and China rattled investor confidence, with President Donald Trump's threat of imposing triple-digit tariffs sparking fresh concerns about a renewed trade war between the world's two largest economies. The sell-off was swift and widespread across Asia-Pacific markets. South Korea's KOSPI index tumbled 2.35%, while Taiwan's stock index dropped 2.3%. Hong Kong's Hang Seng index fell 2.4%, and China's Shanghai Composite index declined 1.6%. Australia's S&P/ASX 200 slipped 0.5%, with Tokyo's exchange closed for a holiday. Fears of renewed U.S.-China trade tensions send Asian stocks tumbling. Trump's tariff threats escalate tensions. The market turmoil followed Trump's Friday announcement that he would impose an additional 100% tariff on Chinese imports starting November 1st, alongside new export controls on critical software. This would elevate total tariffs on Chinese goods to approximately 130%, approaching the 145% peak reached during earlier trade conflicts. Trump's move came in response to China's decision to tighten export controls on rare earth elements, which he called extraordinarily aggressive and very hostile. China's Ministry of Commerce expanded restrictions to include 5 additional rare earth metals: holmium, erbium, thulium, europium, and ytterbium, bringing the total number of controlled elements to 12. These materials are essential for manufacturing semiconductors, electric vehicles, military equipment, and artificial intelligence technologies. China dominates global rare earth production, controlling over 60% of mining and approximately 90% of processing. Markets stabilized after conciliatory signals. Wall Street futures rebounded Sunday evening after Trump adopted a more conciliatory tone on his Truth Social platform. "Don't worry about China, everything will be fine," Trump posted, stating that the U.S. wants to assist China, not harm it. S&P 500 futures climbed 1.33%, while Nasdaq futures rose 1.86% following his remarks. Beijing responded Sunday by defending its rare earth restrictions as legitimate actions, while avoiding immediate retaliatory tariffs on U.S. products. China's Commerce Ministry emphasized that the export controls were defensive measures responding to U.S. trade blacklisting of Chinese companies and new port fees on Chinese vessels. Goldman Sachs analysts expect the ultimate resolution will involve extending the current tariff pause beyond November 10th with limited concessions from both sides. The renewed tensions threaten to derail one of the year's best-performing markets, with Hong Kong's Hang Seng index having risen 31% in 2025 before the latest sell-off. Tech giants Alibaba and Tencent were among the biggest losers as investors braced for potential disruptions to global supply chains.